So, how was I introduced to the credit world? So, probably like everybody else, being in college struggling, you get that first little offer in the email that I take this credit card offer and three to $500 in college. That feel like a lot of money. So just taking that, and I remember getting my first whip in college, and life happened, struggling college kid, mess up that little money. The little card dinged me because you got a couple late payments here and there. So I actually get my first job at like the post office, my first decent job, to where it's like, all right, now I'm making good money, man. I wanna get a new whip. So I remember going to the dealership and they like, man, you got a 500. This ain't gonna happen. The Beez dealership too. So they like, nah, this ain't gonna happen. So I remember just studying like, man, I could pay somebody to get it together, but I ain't never been that type of person. So I'd rather just, you know, study, get my shit together, and go in and fix it. So I remember just studying for like 6 months, trial and error, sending this, sending that. Then finally getting it to shake, finally it clicked, and then going back to that dealership and grabbing that CLA. It was like, all right, cool. Now I'm good forever. Like I know it. To now it's just like, man, it's like an obsession. It's like Kobe at the court, like hooping. Like I understand the game, the algorithm, what the banks want to see, what the banks don't want to see, and I the language on how to get this, how to do that. So yeah, that was just like my intro to it. FICO is the official credit system. Credit, you know, it's 5 sections. Like I said, man, I'm so in tune with it that I really probably don't even pay attention. But you got payment history, you got credit age, type of credit, installment revolving, mortgage, auto, and what inquiries and collections. Don't kill me, don't quote me, but yeah, those the breakups. I mean, it's tough out here, man. So to be able to do anything, you probably gonna need some credit. Like I've never been, I've never been my my background or credit has never been pulled for a job, but even for a job, transportation, loans, credit cards, anything, man. Somebody is gonna pull one of these data furniture to figure out who you is. So it's just like it just give you a add credibility to who you is, like your reputation. Like it says a lot about you that you pay your bills on time, and you can leverage high dollar amount of credit, revolving, installment, personal loans, anything like that. So man, if you could pay it back in the corporate world, the capital world, man, that's a blessing to be able to go to any lending institution and say, hey, listen here, man, I need $20,000 to do this, or man, I want a new car, or I want to buy a new house, and your credit report, which is like your adult report card, come back no issue. So man, it's a big move and a big thing in today's society or society period. If somebody was 18, fresh starting, trying to build a credit, I would tell them before you even think about managing credit or getting involved with credit, manage with what you do have. Because it's easy to spend what you don't have. So if you jump in this credit world and you get your first $2,000 credit card, or somebody give you three, four, 5,000, and you can't even manage the little bit of money that you have now, you're gonna kill yourself. Now, if you kids say realistically, I don't know what anybody 18-year-old starting, but say if you was making $2,000, try allocating at least 30% to savings, another 30, 40, however break down to paying your bills and living off that. That way you can learn how to manage and pay back because these people won't take money back. It ain't, oh yeah, I just got a free 5,000. Nah, it's you can put yourself in a deeper hole getting into this world. Like credit is dangerous, man. First account that I would recommend opening. Back in the day, it used to be a little harder because you just have to do like the secured method where you put $300-400 on the secured card and things like that. Even though that still exists, I would tell somebody, man, there's so many different credit builders and things that you can do first. So you got your kickoffs, you got your meet Ava, you got your yourself. So I would start with one of them. And then if you're a little older and you're written, don't just give these people you guys rent money. There's programs and things out there that you can actually pay, services that you actually pay, like um, rent reporters, rental karma. There's a bunch of them out there that you can actually get paid. I mean, if you've been paying rent for 2 years, you can actually get credited for that, which that's a big one. Then you got Credit Strong. They have 3, 4 accounts. They have a short-term installment. They have a long-term installment. So those are things that juices you up. So once you get, like I say, try to get 3 to 5 of those. The breakdown is usually you want 2 revolving accounts with 2,500 plus. You want a short-term installment. You want a long-term installment. I'll probably add like another short-term or long-term. So me, if I was to break it down, my blueprint would be kickoff, meet Ava, rent reporters, rental karma, and I would do the Credit Strong. They go up to 30,000. You don't have to do 30,000 unless you got it like that. But they have a 5K, they have a 10K that you could do that. But those would be my 5. Starting at 18, I would let them season for 3 to 6 months. But then after that, I'll probably go in for my first credit card. So what's considered a good credit score? Just, man, credit scores vary. Like you have so many different credit scores. You got an auto score, and it's 3, 4, 5 of them. You have a mortgage score, just 3, 4, 5 of them. You got a credit card score, it's 3, 4, 5 of them. So it just depends on what you do. But rule of thumb, 680 plus is a good credit score. But like I say, man, lending institutions is tight now. Like back in the day, 650, 640, 680, you can get approved for majority of anything. But man, we in a different time now, so they want to see 720s, 730s, 740s, 750s before they lend to you and trust you.
How long does it realistically take to build good credit?
Yeah, if you're starting off fresh with nothing, yeah, 3, 6 months. 3, 6 months, you get in. A lot of people like worry about the credit, but that's only half the battle. Like majority of the battle is lending institutions. Like, man, how fast can you get these lending institutions to trust you? Banks, basically. How fast can you get these banks to believe in you and trust you? Like, it's other banks that 1 or 2 direct deposits, 700 credit scores, man, they'll unlock the vote to you. And you got other ones that's like, nah, they more stingy. They want to see 6 months of direct deposits. They want the 720, 750. They want to see somebody else gave you a credit card before and you manage that. So it's just like figuring out the algorithm and figuring out who lending or who more lenient than others. But yeah, 3 to 6 months, you should be good. Like I broke that down earlier. The 5, you have the payment history, you got the age, how many different types of accounts you got. Like you don't want 5 revolving or 5 installment. You want mixed accounts. Like they want to see that you could deal with credit cards, car loans, personal loans, all of that. They want to see, yeah, he or she, you guys are multifaceted. So
Which factors matters the most?
payment history and age. Those 2 are like the 30, I think both are 35, one is 35, one is 30, but those 2 are like the biggest. The rule is 30%. Whatever you use, you want to pay down and keep it under 30%. So I would say use 30%, but if you go over and you use the whole thing to do whatever you want to do or try to do this, don't blow the whole thing and try to pay it back. Don't go out here buying designer Jordans, just BS. Trust me, I've been a victim of that too, where I took this large sum of money and I'm gonna do this with half of it, and I'm gonna do this with half of it, and I'm gonna use this half to pay it back. Like, nah, just be responsible in the beginning, and you won't have to worry about. So, like I say, I can't speak for this because I don't know 100% for sure, but they say if you carry like a 2-3% balance, that it helps your credit more than paying it off. And it builds a better relationship with the banks because the banks is give and take. So you're using their cards and they might get a little interest off of it. So in that way, everybody is winning opposed to you using the whole thing and paying it back. Now the bank can't make interest, but like if it was me personally, I try to pay back my cards zero. I try to zero them out. Biggest mistake that people make with credit is just believing that it's free money. Cause it was so easy to get. Some people just like, oh, I had a 750. I clicked a few buttons and they gave me $10,000. Well, it's not my like. I feel like people are church way harder. 10,000 that they grinded for it compared to 10,000 that somebody just gave it to them. So yeah, so it's just like being responsible with that 10,000. Like man, that just don't go out here freely blowing 10,000 because you clicked the button and they gave it to you and it was easy. Nah, I treat it as if it was like this your hard-earned money. This your last. So the biggest mistake I see people make is just being irresponsible, spending money that they don't have. As far as does checking your credit score hurt it? Nah, not if you just using myfico.com or Credit Karma, which Credit Karma isn't your real score because it's a Vantage score, but it's still it lets you see your credit report. You can see what's on it and what ain't on it. But nah, checking it like that don't. But if they're pulling it and people are checking your credit report to see if you qualify for this, qualify for that, yeah, it does hurt. Late payments, collections. I won't say those. Late payments, collection, or any derogatory. Those are like the biggest thing. Late payments are monsters. Like, cause at that point you might have an account that's been good for 2-3 years, and you get one late payment. Now your score to drop 60, 70 points, and a lot of people coming to me like, man, I want this account gone. But it's like, bro, this a 3, 4, 5-year-old account. That's a lot of your age right here. Like, you can't just, or you shouldn't just wipe that off. Which you can, but I mean, if you could save the account, you just got to get back in good graces. You just got to continue to keep paying on time and doing what you did before you had that late payment. But yeah, late payments, that's a big flag though. If somebody had a 550 credit score, so it's basically like, see what's holding you back. Because a lot of people think their credit scores be wrecked. Well, the whole time it might be a 6-year-old, $120 Macy's or a firm account that, man, let's just get this removed and let's add some accounts. A lot of people credit reports be too shallow. It don't be thick enough. It don't be built out. So first I would say, yeah, just pull your credit report, see what's on it, see what's going down, see what's holding you back, and building out a plan to get this resolved, man. We in that age of AI. Like, there's nothing anybody can't do if you can articulate it, or if you can write a command to AI and say, hey, help me do this. It's just figuring out what's going on.
So what if they have collections for a charge?
Like I said, basically just pulling your credit report. The easiest thing that I would tell somebody to do, that take those credit reports, put them in AI. Tell them, hey man, I got these collection accounts. Build me out a strategy to get rid of these, and let's work on removing it and go from there.
So can bad credit actually?
Just credit. This is the game. This is the game of United States of America, man. You got billionaires, millionaires that file for bankruptcy all the time, and a year later you see them back. You see them back investing or back starting something new. So man, it's just credit, man. Yeah, it could be fixed, but it's just figuring out how to fix it and what to fix and what needs fixing. Because a lot of people go six. I've seen people go 6 years with a weak collection account on they, like, oh, I got bad credit. Nah, you didn't. You just had one negative account and no other credit accounts on your joint. So you really didn't have bad credit. You just didn't have a plan or a strategy to fix it.
So what's the biggest myth about repairing credit?
The biggest myth about repairing credit?
I guess you can go into like thinking that.
I don't.
If it took you 10 years to.
Probably the biggest myth about credit report is the time, the difficulty. I gotta pay somebody else to do it. and it's impossible. Like, man, like, yeah, people get that first verified, or I sent out a letter, didn't nothing happen. Yeah, nothing good happens instantly, bro. Like, you have to fight. Like, how much do it mean to you? Like, all right, if you can get a new car, get a new house, open up different avenues for you to start that business that you want to do, or be lendable, like, how much do it mean to you? So, yeah, man, you might have to put up a fight. You might have to fuss. A lot of y'all like fighting and fussing. Y'all do it every day in relationships, at work, all this. But then when it comes to like y'all credit reports, or these credit agencies, like the first time they hit y'all across the head, the fight out, they knock the fight out you. So yeah, man. So it ain't that hard. It do take a little time. And it's just about staying persistent, man. Staying consistent and not being discouraged or giving up.
Like, when should someone start thinking about business credit?
When should someone start thinking about business credit? When you have about 10 accounts set up, not credit builders, when you have 10 legit accounts. So those 5 credit builders, then you probably got 2-3 credit cards. I would say 15, 20,000, 5, 10,000 a piece. Big boy credit limits. You're paying them back. You managing them. You're selling them 30%. You had a loan, say a 10, 15, $20,000 loan that you paid back. Then you got an auto loan that you're paying back. You're consistent. You might have a mortgage. You might not have a mortgage, depending on how you want to do. But you're handling all of that. Your LLC is set up properly. You have website, business phone number. You generate some income, and then you should worry about business credit. A lot of people want to get the business credit first, want to build out their personal credit, then get the business credit, then start the LLC. Well, at that point, like, what you gonna do with $50,000 if you ain't got the business started up? How you gonna pay it back? Well, I know what people gonna do. They gonna spend all this money trying to get it started. Then they might find out that, hey, I don't like this. All right, so now I'm gonna go buy me some Louis, some Gucci, to make me feel better, to make me look like I'm balling and popping on social media. So yeah, I would say, man, handle your personal, do what you got to do there, start your LLC, see if this the field for you, if you feeling it, or if it's what you thought it was. Start making some money, then go to the bank and let them know, like, hey, I'm ready.
So how important is credit if you want to become an entrepreneur?
Oh, credit is everything. You want to be an entrepreneur. I would tell anybody, because like I said, entrepreneur is the biggest gamble ever. I would rather gamble somebody else 50,000 than my 50,000, because you can do everything right in the entrepreneur space, and it might not pop. You can think you have the dopest idea, the best idea, and nobody else might believe that. So I would say that, yeah.
What's the difference between personal and business credit?
Personal and business credit, like, it's different rules. Personal credit has different rules than business credit. But like I said, in the form of lending, it's the same. Where business credit might not report to your personal credit report, it has its own business credit bureaus that report and do stuff like that. But as far as credit wise, it's the same thing. Like, money is money.
If people only remember one thing from today, what should it be?
Man, if people don't remember one thing from today, be responsible when you're getting involved with credit. I don't care how much money it is. Be responsible. Don't go out here blowing it. Don't go out here living a life that you ain't living, or you can't manage. Just be responsible. When you get involved with it, be responsible. Don't be scared of it, because that's our people's biggest thing is they're terrified. Like, especially the older generation, they have 700, 750 plus credit scores, and they go to the grave with them. When you could have passed that along by maybe doing an authorized user, or you might have a younger generation that has this great idea or this great business idea, but you're like, all right, dismissive. Nah, back them. If they have a business plan, they study, they educated, back them a little bit. Get them a head start. that I see other coaches do. Other coaches will give them that head start. Instead of them having to go to a bank, they go to you. They go to you've implemented a properly structured stuff. So they might have a life insurance policy. Land off that life insurance policy. That way you guys keep that money in your guys' family, and the next generation can get a head start. But don't be scared to leverage credit. So that was sort of like the biggest thing. Of I say take away, be responsible, don't be scared.
What's one piece of credit advice you wish everyone knew?
One piece of credit advice that I wish everybody knew: that credit can be repaired and restored. And I guess, yeah, just credit can be repaired, can be restored. So man, even if you do everything right, you studied and life happened, man, credit can still be repaired no matter where you're at in your journey. It can be fixed. So man, just like I said, don't dismiss it, because you see a lot of people are like, man, F credit, I'm only cash, because they frustrated. Nah, man, it can be fixed. Or dang, I see a lot of people struggling with like they last couple dollars because life is happening and they're stressed out, finna kill themselves because they like, oh, but I gotta pay this $34 or this $123. Nah, you gotta get your life situated first.